but it wasn't as organized as what we have in the northern region. So in the western region, we have things like Isakole. That means that it's a tax levied on land used by local community who are normally expected to pay tribute to their local chief. We also have the Owori, that's tax paid by individual in the community. We have that in the southwestern region. Now, in the eastern region, is premised on is like an egalitarian society. That means that people are seen as equal. But we have some form. Eastern region has some form of taxation as well, but not as advanced as the southern western region, and not as very advanced as the northern region when it comes to taxation. Okay, so and these are the form of taxation. We have the ebunku. That means that tax imposed on palm oil harvested, okay, and it's compulsory. And if you don't pay your ebunku, you won't be able to harvest your palm oil. We have for community efforts you contribute. We also have that not tax is not only by making payments, you also contribute to the community development. So it's not only that you pay in cash, you can, I mean by giving your goods, you can also contribute to community development. That was the form of tax as well. So you will see that northern region has formed a good form of direct tax, the western region medium, and the eastern region, very, when it comes to taxation, it was very weak. They are not used to that. So now we have, whereas in the southern part of Nigeria, political and administrative institutions were yet to be well developed. Consequently, the tax system was less developed, and that's when compared to the northern region of Nigeria. The kings, chiefs, and other traditional rulers rely on tributes, tolls, and arbitrary levies for their revenue. So it wasn't as structured as what we have in the northern region. So it's they rely on, okay, on your own. You give them tributes. I mean, you give them some. They pay some form of levy. It wasn't very especially the eastern region. It wasn't very structured or organized. Like, I mean, compared to the northern region. Although the northern region came and there were issues in the northern region, and we have Lord Lugard coming up with some form of ordinance, which I will share with you in the course of the lecture. So we also have what now happened in 1904. So in 1904, Lord Lugard introduced income tax in Nigeria with the introduction of community tax in northern Nigeria. So income tax is was the first form of taxation, and not consumption tax, not consumption or transactional tax. Like, consumption tax like value added tax, consumption tax, and these are consumption tax. But income tax was the first form of taxation we have in Nigeria. So Lord Lugard in 1904 introduced income tax in Nigeria with the introduction of community tax in northern part of Nigeria. That was what he did. He noticed that, well, in the north you had structure, then introduced income tax. It was very easy. He later made changes which crystallized into the Native Revenue Ordinance of 1917. So the Native Revenue Ordinance of 1917 is an, when Lugard now said, oh, after introducing a form of community tax in 1904, then 13 years later he passed the Native Revenue Ordinance of 1917. This is the first kind of law passed by Lugard when he was in Nigeria. This ordinance was amended and extended to the southern Nigeria in 1918 when it became operational in Abeokuta and Benin, and was further extended to eastern Nigeria in 1928. Okay, you could see that it wasn't until 10 years later that the ordinance was extended to eastern Nigeria, and that was what led to the Aba women crisis riot in 1929. Okay, so but it was introduced with ease in the north now, and in the south, western Nigeria, in Abeokuta, 1 year later. But in the east, because the eastern region tax was not well developed, people live based on community efforts. is an egalitarian society. There's no centralized authority as such, and it was difficult to introduce such tax. But eventually, it came in 1928. It caused an issue, and uh, the Easterners, I mean, internalized the ordinance. Now, in 1940, the Direct Taxation Ordinance number 4 was enacted, which incorporated the Native Revenue Ordinance of 1917, 1918, and 1928. So after the Native Revenue Ordinance have been introduced in 1917, 1918, and 1928, the Direct Taxation Ordinance number 4 of 1940 applied to native Nigeria except those in Lagos town. So there was a direct taxation ordinance that, it now applies to everybody except those in Lagos states, Lagos township. That's what happened in 19. So direct tax, that which is income tax, was the first form of tax. This is like tracing the origin of SITA, company income tax. Okay, so in 1943, don't forget that the 1940 Direct Taxation Ordinance exempted Lagos State. So in 1943, Income Tax Ordinance 29 was passed and took effect on 1st of April 1943, which made it possible for non-Nigerian, even Europe, living in Lagos, all over the country, and African living in Lagos to be assessed to what tax. Don't forget about the principle of taxation, impartiality, equity. Why should we excuse some person not to pay tax? Why they're in Nigeria? Why they're enjoying the same amenities by the government? Why won't they pay tax? So that's why we have 1943 income tax ordinance. So you could see that discussion, history will enable us to contribute to modification of tax policy and improvement of current tax policy until we get to a stage that you said the policy is affecting the common man, is supporting the budget positively. So we also have what happened under Richard Constitution. Richard Constitution divided Nigeria into north, east, and west. North, east, and west. That's what. So what happened when Nigeria became federation in 1954 under the Macpherson Constitution? The three regions had jurisdiction over taxation of the personal income of Africa. So that means that each region has jurisdiction. They have the power to enact tax themselves. The North has the power, the South, the East has their own power, and of course we have and of course we have the West as well. They have their own power. Then what now happened? Consequently, the Eastern region enacted its finance law number 1 of 1956. The Western region enacted its own income tax law 1957 to replace the income tax ordinance, but the Northern region did not enact its own similar law. So each region have their own law. Okay, so they have the power